Welcome, everybody. We've got an exciting guest with us today. It's John Rojas from Shield Insurance. Really excited to have this conversation. Insurance typically is something that is not exciting to talk about, but what I'm interested in is hearing John's story. He's recently started, his own company, and really curious, John, to know who, what, where, when, how, why, and I'm sure this conversation will add value to our broker businesses out there. Maybe to kick us off, if you just want to give us a little bit of information around your background and just your motivation for starting Shield Insurance.
Absolutely. Thanks for your time today, Andrew. And it's really great to be here and sharing my story and obviously what we do. So I've been in the insurance industry since 1992. Back in the old days when National Mutual was actually around. We used to help clients with insurance. It was at the old days of actually getting the white pages and basically doing the cold calling. So I understand insurance inside and out. Then I moved into the lending side of things, and that's where I got a real understanding of home lending when brokers first started coming out to the market, when RAMs actually first came out, when Aussie Home Loans first came out. And I set up my business just before, about 5 years before GFC, from a financial planning and home lending business in Liverpool. And that's where I got a real affinity around helping clients that have debt with mortgage protection, making sure that if anything happens to them, they don't lose their biggest asset. After that, I did move into financial planning and moved into leadership roles. And within the BT Financial Group, MLC Life Insurance, I was a state manager there for New South Wales and Queensland for 5 years. And after that, I moved to Integrity Life as a BDM after being made redundant. But the whole story about Shield Life Insurance really started brewing probably about 3 years ago when Stephen Harris, the general manager at Nectar, wanted to do an offering for brokers that was actually a little bit different. The whole industry went through a lot of change over the last 4 to 5 years, particularly after the Royal Commission, and where compliance became a burden. As a result of compliance, the cost to serve from financial advisors to be able to offer insurance became quite restrictive. And as a result, we started seeing less Australians being covered. And not only that, but 4 years ago, we had over 26,000 financial planners within the industry. And now we've got roughly about 15,000 planners in the industry. 4 or 5 years ago, as an industry, we used to write between $800 and $850 million worth of insurance premiums. And now we're about $250 million. So there's a huge opportunity being able to work with mortgage brokers, work with accountants, work financial advisors, and give them an opportunity and a channel to be able to help Australians life insurance that is accessible, that is efficient, and at the same time, it's a bridge to personal advice when customers are actually ready to move into the financial advice space.
That's a lot of change. And I know, look, I knew of you, I think from your BT days, and I was back at St. George then. But I think the first time we had, a good quality interaction was when I was working at Yellow Brick Road. At the time, their model was that they had a blend of financial planning and mortgage broking. Mm-hmm. And since, look, they've moved away from that model, and for some very good reasons. That industry was absolutely smashed by compliance. But and I was trying to find out, how does it all work? How does it all integrate together? And my background at St. George, for a while, I was the SME for BT Super for Life and financial planning in the sales and strategy team. So I knew a little bit about the sales side, but the actual running of a business, it quickly discovered it was a lot more complex running a financial planning business than just a mortgage broking business. So just out of curiosity, a good conversation at the time, and you gave me some great into what it means. Clearly, being a financial planner and a mortgage broker is a challenge. Why is something like Shield Insurance option for mortgage brokers, and does it come with a lot of additional complexities or challenges? And what mortgage brokers actually be even thinking about insurance? Isn't insurance for financial planners, or should mortgage brokers be thinking about the cover their customers have?
The whole journey starts with a client looking for the lending side of things. They come to a mortgage broker and they become their trusted advisor. So the expectation is, from a mortgage broker perspective, to be able to do what's best for the client. And a lot of brokers actually do that. They, bend over backwards to be able to source the best type of loan for that particular client based on their needs and objectives. However, it doesn't stop there. because at the end of the day, purchasing a home, their first home or an investment, is probably one of their major purchases they actually have. And being able to protect that in the case something happens, that's also paramount for a mortgage broker to be able to initiate that particular conversation and point the client in the right direction in terms of where to go to. So yes, we can actually go to a financial planner. Yes, we can go to actually industry superannuations. Yes, we can go to a business such as Shield Life Insurance. Why the business was actually born was to actually make it easy, because traditionally what has happened and what I've seen with a lot of mortgage brokers is that mortgage brokers, they own that relationship with the client. And the last thing they want is for anything to go wrong with that particular relationship. And by referring it to a financial planner, at times it affected the actual relationship, or they might not necessarily know what's happened with that particular referral sent through the financial planner. And the whole process, when you do send to a financial planner for insurance, it can take anywhere between 4 to 6 weeks, roughly, in a couple of meetings. Plus, at times, there's an upfront cost to actually do the plan fee. So the overall client experience is, it's a little bit hard, particularly when disposable income is limited. Where Shield Life has actually come in, it's a general advice. We do not provide personal advice. What we do is educate your client, the mortgage brokers, around the different types of insurances. We let them know and we give them guidance around what they should be considering to work out their sums insured. We don't tell them how much they actually need. And at the same time, we're able to actually provide them with quotes. And we work with 9 different insurers out there in the market, the same insurers that financial planners actually work with. And by that, we know that we're offering them a quality product with a quality company, depending on what is it that they actually need. And some insurance companies have appetite for different demographics and different occupations and different age, whether they're non-smokers and smokers, and premiums vary quite significantly. By giving them that option, and we're talking about probably about a 20-minute meeting, 25-minute meeting, we're able to actually provide that information to the client. So it's quick, it's efficient, it's easy, it's no cost. But most importantly, the biggest thing that Shield brings to the table is that relationship, that partnership situation. Nothing worse from a mortgage broker to refer one of their clients to and not know what's going on with that particular. We make sure to let the referrer know as soon as we speak to them, as soon as we've quoted them, as soon as they've purchased the product, as soon as the product's actually completed, because that customer is going to be talking to the mortgage broker. And from a mortgage broker perspective, I own that relationship. So yes, I'd like to know what's going on with my client. So it's really important for me to work with a broker and partner up with a broker to ensure that there's transparency in terms of communication.
I think, look, thanks for that explanation. And I think there's a lot of synergy there between the way a broker operates and the way that you operate. You know, one of the great things about being a mortgage broker is being able to offer choice to customers. And one of the things that you highlighted there is by, you know, someone like Shield Insurance, you're not kind of into a particular product with a certain provider, but you're giving them access to choice and helping them find a product that works for them. We talk a lot about diversity in revenue streams in mortgage broking and trying to diversify how the revenue comes in. It's a big talking point. It's easier said than done. Like during coaching, I found a lot of mortgage brokers are relatively set in their ways around the types of conversations they have, how they communicate with their customers, the process that they go through. Something like talking insurance might be something they're not comfortable with. What could you give on how would you integrate, I guess, the insurance conversation into the mortgage broking process?
That's a challenge that I've actually seen work with a lot of brokers, Andrew, is brokers are set in their sales process and they're very good at what they do. And also starting to talk about insurance, it's, holy cow, this is an extra step. I need to start speaking. How much do I say? What am I allowed to say? What am I confident in being able to talk about insurance? Do I really know the product themselves? So if I take a step back, the question that we should be asking is, as a broker, do you understand what it is? Do you understand the different types of insurances? What does life insurance do? What does total and permanent disability do? What does trauma cover you for? And what does income protection do? Did you know that there are options that your client can actually fund these insurance with? Maybe inside super, outside super that can help with affordability. So if you can actually understand that first and then position it in a way that's relevant to your customer, it's going to make a huge impact. As an example, first home buyers, okay, traditionally disposable income is quite limited, in the phone. And when you start talking to them about all these different types of insurances, the first thing that they think about is, how much is this going to cost me? I'm going to struggle with my first mortgage payment, let alone I'm going to start talking about insurances. So from a discussion point of view, the reality is, if their income stops, or one of their income stops, if there's two borrowers, they might be in financial hardship. As a broker, maybe let's talk about only income protection. Okay, can we do something about covering your income protection? And by the way, there is an option of funding it via super where it doesn't affect your cash flow. So at least we're giving them some form of protection, and then we can talk to them about something else when Shield Life speak to that particular customer and see whether there's an option of doing something else for them. But at least it's about keeping it simple, not going about the full suite of insurances, because it can be overwhelming. And it's a foreign language. I mean, really wakes up saying, hey, I want to buy insurance today. Do they?
No, look, it's so true. And it's actually what was going through my head while you were talking is, the key differences between selling someone a mortgage and selling someone insurance. When it comes to refinance or a purchase, the customer's typically coming to you with a need they're aware that they have. Insurance is one of those things that we don't want to think about and are not at front of mind, and not something that we're pursuing. It doesn't look like an asset class. It's really just peace of mind. It's purchasing, the spare tire in the car just in case you get a flat tire. And sure, it's like you wouldn't want to drive your car without a spare tire, but how often do you think about your spare tire when you're into your car to drive? You don't. And I think that's part of the challenge for mortgage brokers in having this conversation is many times, as a mortgage broker, the customers come to us with a stated need. They say, this is, I need to purchase a property. I need a cheaper rate. I need more cash flow. I need funds for investment. And it's quite easy to have that conversation. I think there's two types of conversations mortgage brokers can have around this. The first one is that they can do kind of just explained, which is just simply mention it. Say, as a part of this process, I'm going to get a member of my team, my team of experts to have a look at this for you. They'll pass on your name and number. Or if they do want to have a more in-depth conversation, it's about taking the customer on that emotional journey and asking nice, broad, open-ended questions like, when's the last time you reviewed your insurances? Or what thought have you given to what happened to your mortgage payments if something was to happen to yourself or your partner? And although they're uncomfortable conversations to have, what you are doing is actually bringing their attention to that need, and you're able to then offer, if I was able to say something along the lines of, if I was able to offer a potential solution to that, would you be interested in having a chat to somebody? Obligation free, takes about 20 minutes, and you walk away with peace of mind. And I heard a great quote from someone sometime where they said, I'd rather have a moment of awkwardness than a lifetime of regret. That awkward conversation with your client, which is, yes, you are asking a hard question, potentially can save yourself from having a situation later on. So I think this is a key and important part of looking after your customers. And for a conversation in the middle of everything that you're doing, whether it's just as basic as a part of this process, one of the things we'll do today is review your insurances. Are you okay if I passed your name and number onto one of my partners who's an expert, right through to broader questions and having a little bit more of an emotional conversation.
On that, Andrew, about reviewing the insurances, one of the things that to be mindful is 4 years ago, there was a lot of change within the industry. A lot of insurance re-rated their back books. And what I mean by that is, I'll give you an example. I own income protection with a particular insurance company. And from 1 year to the next, my renewal went up 75%. Okay. And the following year, it went up 20%. So in the space of 2 years, my insurance premiums went up 95%. Now, that particular insurance company did put up their rates up quite high, but not others didn't. So there's the disconnect and the disparity between insurance companies. So just like clients come to you as a mortgage broker to review their home lending with interest rates, if you do happen to have an insurance policy with a particular company, you owe it to your client to remind them around reviewing and seeing what else is out there, because we've had new entrance markets such as Neos, as an Encompass, okay, which are quite competitive with pricing. They're not necessarily work with the demographics, but unless you speak to someone and you review your cover, you'll be able to see potentially can save. I mean, only last week I spoke to a client and we were looking at the sums insured between companies, and there was an immediate saving of about $1,800 a year. Okay, now it's huge. Okay, and you won't find out unless you talk to someone.
Well, I think the great thing is it's not that you have to have the conversation yourself. You bring someone into your business or into your team that can have that conversation for you and add that value to your customer. But on that point, I guess some brokers may be hearing this conversation and still not sure about what they can say and what they can't say. Are you to, I guess, talk a little bit about, the difference between giving some general advice compared to, a financial planner would give? What are the different levels of advice? What can a broker say? What can, I guess, someone that you're talking to or one of the partners that you're referring them to say compared to someone going out and getting a full statement of advice from a financial planner?
Yeah, look, as soon as you start taking into consideration the client's needs, objectives, and current situation, and make a recommendation around that area, and you influence the client in a particular way to purchase a product, that's what we call personal advice. So as a broker, you've got all the details of that particular client, for instance, and you can see that it has basically money, this insurance, I should say, within super, okay. And the broker does say, look, you actually perhaps start looking at a life insurance because competitive product, they've got good rates for whatever reason. That broker's client to look at MLC. All of a sudden, we start considering that as personal advice. It's not factual information. Okay. General advice, what a broker can say is say, hey, you've got $200,000 worth of life within your super. I think you need to speak to someone around potentially how much you actually need and who can actually give you some competitive premiums based on what you think you actually need. You're being very generic in your approach. Now, I've got a particular leaflet that I talk about, that I give brokers, that talks about the different types of cover and what they actually do. And that's a great starting point to be able to let the client know around what can obtain cover for and potentially and actually fund that as well.
Yeah, no, very, very good. And I think that's probably the key point for a mortgage broker is wanting to understand if something was to happen to the client, how can they pay off that debt? I know a lot of people say, well, I might have income protection, I have something like that. And I know unfortunately from firsthand experience working with some customers where things have gone wrong, that sometimes that isn't enough. Like typically income protection is only 75%, 80% of your actual
70%.
Yeah, so it's not a lot. And you've got to continue to pay your bills. But typically when something goes wrong, the cost of living actually increases because then you've got hospital bills and additional costs that you weren't expecting. The reason I'm passionate about this topic is I worked with a lender, and I'm not going to give much details. I don't want to disclose any identities. And they actually did a home loan for a family member. And a particular family member was incredibly fit. They used to do triathlons, ride a bike every day, fitness. And like many of us, when we're trying to do something for a family member or for someone that we know, we're just trying to make it as easy and as quick as possible to get their loan. Mm-hmm. And unfortunately, not long after they got the loan, the person had been riding their bike and was hit by a car. And the most tragic, and this sounds horrible, but the most tragic thing in that was the person unfortunately didn't pass away. And because if they were to pass away, there was coverage within the insurances. And unfortunately, they survived, and they were going to be living a life that was going to require 24-hour care for the rest of their life. And remember being in the office with that lender and hearing them question why they didn't include insurances. It's horrible. It was horrible.
Yeah. And
And
you raised a good point there, Andrew, because no take out insurance hoping you never make a claim. But when you do, something happens, something goes wrong, and you make a claim, you want the insurance to actually pay. Now, in your particular case, this claim it was effective for a long period of time. One of the things that I'm really proud of is the work that a lot of insurance companies have actually done around their claims experience, their claims process, how they work with your client in terms of the rehabilitation side of things. And it's not to pay less insurance, far from it. Okay. It's making sure they do what's right for the client mentally, physically, and in terms of rehabilitation, and the amount of support that they offer the clients in terms of physiotherapists, specialists that from any perspective, if you're not in the field, you wouldn't know. But if you've got someone who's an expert managing that claim, okay, and make sure that that client, can, on the road to recovery, it is huge. Psychologically, it is huge. Okay. And really proud of a lot of work that insurance companies have actually done. And they're at the forefront in terms of that piece of work.
yeah, look, and to give the other side of the coin, I've also personally had a client who did that insurance, and literally 2 days after settlement, they passed away unexpectedly. When they did come back to see us at the time, to be able to tell them that obviously after going through the process that they did not need to worry about the mortgage and the mortgage repayments, that was a good feeling in comparison to that sense of loss and that sense of lack of control. So it's an important part, and I know it's something that most mortgage brokers don't want to have to think about or don't want to feel for. And I do know under some models there is some responsibility on the mortgage broker, but I don't believe that's the case with Shield Insurance. I think this really is a case of giving your customers an option, and we offer it to every customer, or just the customer that you feel comfortable having that conversation with. That's okay. Are you able to talk a little bit more about what that actually looks like? What is the responsibility of the broker in that relationship?
Yeah, look, from a compliance perspective, from a responsible lending perspective, obviously, what I'm hearing a lot of is that brokers want to make sure that they're ticking the box, making sure that they're having that discussion. So there's a difference. You can either tick the box, or you can basically do something about it. And I'd like to think that a lot of brokers do care for their clients. And when they do make that particular referral, it all starts with that trust component. And probably the biggest inhibitor, Andrew, that I've seen is that from a mortgage broker perspective, I don't know who you are, John. Okay, so would I actually give you my client? And the feedback I've received so far from a lot of brokers is that I asked them to test me is, let's try one client. Let's see how the experience goes. And it was only last week I had a broker basically reach out to me, had a conversation, understood how Shield Life actually works in terms of a business and what their client experience would look like. Because that's important to me. Insurance is overwhelming. I don't want to make it a 1 hour conversation because it's too long. I don't want your client going back to the broker and saying, hey, that was tough. Okay. Now insurance is boring. Okay. I'm trying to make insurance a little more palatable in terms of having that conversation. Not sexy, but just palatable. Okay. So at least it's a good client experience. So that's why I tend to break my meet. I have a 20-minute meeting to give them all the information. And then subsequently, I have another meeting to do the application. And I actually share the screen. Sometimes I do a Teams meeting. I share the screen. They can see the applications. They can see the questions that I'm asking them. But going back to the trust component is around making sure that as a broker, you are comfortable with the person that you are referring to. Whether it's me, whether it's someone else, you need to have that connection. Now, I've been fortunate enough that I've worked in the mortgage broking industry. I understand your jargon. I understand your process. I've been fortunate enough that I've worked in financial advice, understand financial planning, and I love it. And I really believe and in what they stand for. And I've also worked, for MLC and Integrity from a product provider point of view. So I understand how insurance works. And at the same time, I've been able to develop a lot of relationships with a lot of underwriters who look at the application. So I can actually work with clients when there are complications with existing health and have different types of conversation to make that experience seamless. Because it's all about making sure we look after the client. Client's front and center of that experience. That's the difference that we bring to the table.
Brilliant. Very well said. Just to close this off, is there a message at all, I guess, for brokers out there who might be considering whether they do partner with someone like Shield Insurance? What would be your message to them? And if someone did want to get in contact with you, what is the best way to make contact?
Yeah, look, best way to make contact, with the contact details, my contact details. Andrew, up and running, shieldlifeinsurance.com.au. The brokers are, make sure you always talk to your client about protecting that particular asset. Okay, insurance cheaper than you actually think, depending on how it can actually be funded. You don't have to have millions worth of life insurance. Okay, tailor something that's affordable to your actual budget, but you won't know until York has a conversation with me. Now, I'm all about client experience. I'm all about partnerships and making sure that I'll work with you. If you need to work on point of sale material, email templates, I've been there, I've done that. I've got templates that, they actually work. So utilize me, use your subject matter experts, whether it's me or someone else, they will have information that's suitable to your business and that it can be tailored. So, we're specialists.
Brilliant. Well, I just want to say thank you so much. Good to catch up again.
No,
Good
thanks,
to have a
Andrew.
chat. It's not a sexy chat, but it's a palatable chat. But I really appreciate your time today and good luck with everything.
Thanks, Andrew.